So we're good to go? Get out of this room. Okay, so Matthew, do you want to be up first?
Yeah, sure. Do you have a setup, or I have a list of things that I can go through in a quick presentation and then go to questions, or do you want?
Yeah, let's do that. That's better. Yep.
Yeah, whatever pitch and lead up you want.
Okay. Heather and Dave, do you guys have anything pressing after? Like, does it matter which one go first? Does anybody want to go first after Matt?
Doesn't matter to me.
Doesn't matter to me either.
Okay. How's everybody doing today? So we're gonna get started here pretty quick. Probably have a bunch more people come on soon. So we just wanted to start this while we're all kind of in quarantine in our houses. It gives us a chance to get together and collaborate. That's what this is all about. So what we're gonna do today is we're gonna have Matt from area chat about some things, and then we're going to take some questions over chat. So after he's done, you guys can just type in the chat any questions that you have, and then we'll answer them. And then after that, we're going to have Dave West and of West Legal and Heather from MMG Mortgages talk about how the virus is affecting business updates, any questions that you guys have, and then after they're speaking, if we have some time left, we're all going to get into some breakout rooms so we can all chat with each other. It'd be nice to really start coming up with some ideas for some more seminars and stuff. We'd like to do a few of these a week, some lifestyle ones, obviously ones about real estate, just things that we can keep doing together and support each other while the virus is happening and while we're stuck inside, because the more we can do now, the stronger we're going to be when this is over. So we have a lot going on today, so we're going to get started. So I'm going to let Matt from area start talking, and then just hold your questions till the end if you can. That would be great.
Perfect. Thanks so much, Ryan, and thank you everyone for calling in, videoing in. Thank you everyone for being here. As Ryan said, I am Matt McMillan. I am the advocacy advisor from the Alberta Real Estate Association, so area. And Ryan asked if we had anything to share, and boy, do I. But I just want to talk about sort of the overall ethos right now at area for dealing with the COVID situation. And it's basically cushioning the impact on realtors and their clients, supporting the government to get through and giving good advice throughout, as well as planning for the future. So cushioning, support, and planning for the future. Matt,
can I just interrupt you for 1 sec?
Yep.
We're just get a couple comments coming in about your audio. Is there any way we can get a little closer?
I can get a little closer. If everyone's okay, just lower your HD settings.
Thanks.
Is that better? Can you hear better? 5 by 5.
Everybody hear him okay? Anybody not? Good? Okay, awesome.
All right, I'll start again. So I'm Matt. I'm from area, the Alberta Real Estate Association. I am the advocacy advisor. So my normal job is working with government officials, MLAs, politicos, that sort of thing. But it's sort of pivoted with our COVID situation. So again, area's ethos during this COVID situation is cushioning the impact, so cushioning realtors and their clients, supporting the government where possible, and planning for the future. So what is real estate going to look like on the other end of this thing? So cushioning for realtors and clients, I have a couple of points. If you get lost at all, feel free to go to albertarealtor.ca. A lot of this is on our website. And if not, you can always email me at advocacy@albertarealtor.ca. So again, if you miss anything, albertarealtor.ca is your place to go. Cushioning realtors and clients. Some of you may have heard area itself is taking some actions. Our office is not closed, but we are on a skeleton crew. Everyone else is working from their homes. So if you have to make a phone call, you can still do that, and you'll get sort of routed to the right staff member. As well, the Area Advance program, we've reduced the interest rate in the short term. That's sort of a bridging program for brokerages and their clients. So we've reduced that interest to 0% right now. As well, you might have seen our board met, the Board of Area met last Friday and announced a fee holiday till August 1st. So our fees are pushed back, the deadline for that, to August 1st, and the board has looked at reducing those fees. So the fees were $393 and change, and now it's $295, so 25% off to help cushion that economic blow. Our professional development area, so our mandatory course every year, we're looking at ways that we can add more PD content and make sure that we get material out to realtors during this potential downtime. If you go onto our website, a very strong resource is our COVID resource page. So again, albertarealtor.ca. It's our first thing on our banner. It's our COVID resource page. So we've sort of been collecting material coming out from the federal government, provincial government, from the health sector, as well as inside of real estate as a resource for, okay, what is real estate like during this period? And what do I need to know that otherwise would be impossible to hunt down independently? So on that site, you'll also be able to find some information about EI expansion, some of the stopgaps that the Alberta government are doing. We've sort of broken it into supports for clients, supports for realtors, as well as supports for brokers. We've pivoted our advocacy efforts. So normally my job is working with like Spin 2 staff and Service Alberta staff. Most of those individuals are shut down right now. The government itself is on a skeleton crew as well. So we've pivoted our advocacy towards those 3 steps again: cushioning realtors, supporting the government, and planning for the future. And when I say supporting the government, that isn't like supporting the UCP over the NDP. It's more so the government needs to make moves, and we are providing resources to help them make the best economic choices, or at least to get it on the table so that they can read those economic choices. Finally, wireless on the area front on cushioning. We have our area wireless program for, if anyone listening right now, we've adjusted and given some leeway on roaming. If you were out of the country, if you were stuck out of the country, there's some roaming leeway, as well as a long distance rate cut within Canada. So again, trying to adjust while still maintaining the system, right? We need funds to come in to keep the system up, but we've reduced everything as much as possible. Cushioning realtors and clients, end of chapter 1. Chapter 2. Support. So I've mentioned supporting the government. What we've been doing, we work with a couple of consultant groups as well, and it's just feeding information to Service Alberta and to the Premier's office, as well as working with the official opposition on moves and concerns. So bringing up the point in collaboration with CREA at the federal level, bringing up the point of saying, look, realtors aren't covered by EI, and this can hit them just as bad as everyone else, and they're dispersed across the country. So there are changes actually this morning. The federal government, 32 MPs are meeting to pass a law that will enable some of these changes to happen. A lot of the announcements that happened last week can't be done till the law changes. Alberta did it over the weekend. They met and approved new rules. But again, our role in that is looking at supporting what the government is doing, supporting their work, which again, based off of science, right? Science and medical profession. You might have seen that we posted about open houses very recently. And again, it's that balance of cushioning and supporting between the two. And I know in other jurisdictions, some have not canceled open houses, but again, it's that thought of if we can stop the spread today, it's a penny for a pound sort of situation. So that's cushioning, that's support, and then the long haul. Again, all of this is focused on getting through to the other end, getting through to the other side. So when we're talking with provincial government, federal government, and industry counterparts, our whole aim is what will the situation be like on the other end? You might have noticed the Premier Kenny has been mentioning more and more about the housing situation, and that's our efforts in making sure it gets into the narrative. We've seen mortgage holidays, we've seen holidays on loans and lines of credit through ATB. A lot of these levers come from good ideas coming in from members. We've filtered and triaged those ideas, and they do get shot up straight to Minister Glubish, straight to Premier Kenny, and sort of gets rolling along. So that's areas changed a little bit, but we're still on the same mission of making sure the industry is as healthy as possible and planning for the future. I could go on and on and on. I could read through every individual report or every individual support. But again, there's a good chunk of them. So if you take one thing away from me being here, sitting in my living room, is go to the area website, Alberta Real Estate or albertarealtor.ca. And if you have any questions, advocacy@albertarealtor.ca. And all our resources, we're pumping it out onto that platform and updating daily. Part of my job, again, is tracking all of these things, so we're putting it up. So that's cushioning, supporting, and planning for the future. All great things in a great area day. Ryan, questions? I said confidently. Ryan, questions? No.
There we go. Yeah.
There we go. That's more confident.
Thanks, Matt. Does anybody have any questions for Matt? Anything to have to do with area?
Cool. And in case anyone's typing, again, we are working actively. There's a conference call this afternoon with CREA. We're going to be watching a lot of the federal things that happened today. If you have free time, feel free to check out any news stream. It'll be interesting. 32 members of parliament. They basically ratioed it down to as few people as possible to be next to each other to vote on actually a rather sweeping piece of legislation. So if you like politics, you're in a good time for that. If you don't like politics, I'm sorry, but we'll try to filter as best as we can.
Matt, it's Margaret. Sorry. Quick reiteration from you, if you wouldn't mind. So I am taking away that you are working towards getting some sort of possible funding for real estate agents in the way of an EI supplement or something of that effect?
Yeah, so there's a couple of levers and a couple of levels. Basically, the federal government's choosing to use the EI structure, but realtors don't pay into that. The vast majority don't, just like the vast majority of self-employed. So it's going to those government officials and it's sort of explaining that situation of, look, a realtor doesn't, in this situation, a realtor isn't necessarily quitting. It's more so there's not enough work to maintain the household. So it's explaining that exchange. So what you'll see is, let me just pull it up here on the federal side. There's some isolation payments. So if you have to go away because you're sick or if you're taking care of someone sick, there's extra payouts for that. We've spoken with the provincial government, actually has put a bridging fund into that because the federal programs aren't going to start until later in April. Other things include utilities deferment for residential, farms, small commercial. So the provincial government has the power. You may have heard emergency measures or a state of emergency. And that sounds like panicking, but it's more so it just enables that level of government to put aside some of their procedural rules. So in Calgary, people were sort of panicked when Calgary went to state emergency 2.5 weeks ago. But realistically, what that lets is firefighters can go to the Canadian Tire and buy a generator, and they don't have to wait a week for approvals because we need it now. Those sorts of situations. But you're right. On the support for realtors and on the funding, it's all about communicating to the government and getting through those bridges that otherwise would prevent any funds happening or getting transferred. That's at the federal level, but there's also levers aside from direct support. There's a lot of mortgage rules, there's a suspension of the benchmark rate. Education property taxes have been frozen. If you're a business owner, so if you're an office manager or if you're a broker, there's a lot of special rules now about WCD and premiums, all intended to, the provincial government is looking, and the Premier Kenny said yesterday, they are looking to the federal government to do a bulk of the front end, the in-crisis financial support. And the provincial government is focused on bridging between those supports and focused on economic recovery after.
Okay. Thank you.
I have a question from Allison's giant iPad. Is the 25% off refunded to those who have already paid their dues? That's a good question. What I can do is I can touch base with our accounting department. I do believe so. However, that's not my full-time job. So what I'd say is I'll touch base with our members and then I'll shoot an email to Ryan afterwards to get that information off to you, Allison.
Excellent.
That works on Ryan's end.
I got the one thing I got very lucky in the last year or so because I've got to know the people at Area very well. I got to be honest, even being in the business for 10 years, you don't really, unless you're somewhat involved or see it on a daily basis, you don't really know where the line is between exactly Area and Eureka and everything. And, you know, I find that people come down on Area pretty hard and, you know, expect a lot of things from them, but they do a lot of really good work. The last year or so, because I have been more involved with Area, there's a lot of things that they do for us. And then when agents ask me what it is, like how I explain is I almost tell them they're almost like our union. So they actually do everything they can to look out for our interests. And I think that people obviously don't realize that. And I really think Area should get out there more doing those things so that people can see that. And that's kind of what this is about. That's why I wanted them here as well. Like, Matt, do you want to talk about maybe some other initiatives that you guys have been working on in the last couple of years?
Oh gosh.
Like, I know there's been a ton. Like, you know, you guys have lobbied to, you know, get rid of the stress test, all these things that affect our business negatively. You guys always work on our behalf to try to get it fixed. So
yeah, so since I started with Area about 2 years ago or so, we've looked at increased spin hours. So spin 2 hours on the weekend. It's all about, like, it was union contracts and staffing. Well, okay, we'll bridge that gap to get better services. So spin 2, we've worked a lot on the federal stress test, and the provincial government is very, very aware of the impacts of the stress test. Condominium insurance, condominium documents. We've done a lot of stuff working with RECA and the situation that some individuals at RECA brought the whole organization to. We worked on that. That's in advocacy land outside. We have Area Wireless now, so if you're not in the know about that, we have a large group of people. We went to Rogers and said, can we buy a data pool? And then we'll sell it to our members at a discounted rate. So we have Area Wireless, we have Area Advance, so that the advance in commissions. We also have the commission protection program, the self-insured commission protection program, which came online not too long ago, or we're ready for using that. Boy, yeah, a lot of stuff. PD developments, a lot more input, taking from members their feedback on those videos. It's all, and mainly it's a focus on what is the best need for members now, for the majority of members, without negatively impact the minority of members. That's sort of the main goal at Area, paired with, that's the internal and the supports we do with the forms. We do a ton of forms. Kelly's my cubicle mate, so I get to see what great life that is. But a lot of work on the back end to just make sure that your interactions with clients and other realtors is as short and streamlined as possible. I know that isn't always the case. That's our target. I don't think you can always make everyone happy at any given time, but our aim is support the membership as best as possible, and spread the needs of real estate across the sector and across the government. We also do like some surveys and some studies, and last provincial elections, town hall forums, we did a survey of the province, and it cost less, and we gave the data to all political parties, and they made their platforms around the needs of real estate. So smart ideas, taking smart ideas, bouncing on that benchmark of will this help members without hurting members, and then moving forward. Hopefully that's a long enough spiel, but if not, you can catch me on the late night telemarketing circuit.
Awesome.
I'm at Lamco.
Anything else for Matt before we let him go? Good. All right, sir. Well, thanks for your time. Appreciate it.
No problemo. Off to more realtor work.
Yeah, sounds good.
Thanks so much for your time, Ryan. Thanks everyone who's on the line. Again, advocacy@albertarealtor.ca if you have a question down the road, or if you want to yell, question, comment, whatever. Advocacy@albertarealtor.ca. Thanks so much, Ryan.
Thanks, Matt. Okay. So now we're going to have Dave. Dave, are you on still? There we go. Now we can talk. There we go.
Good.
Good. So Dave is, he's a lawyer that we use regularly, just because he's so awesome. So anyway, we thought we'd have him on just to talk about any legal implications with contracts, that kind of thing, closings with COVID. So I'll leave it to him.
Sure. So I missed everything that Matt said, so I apologize if I'm repeating myself on contract stuff. System seems to be up and running now. So for us, with the current situation, we have two priorities. Our first priority, which is always our first priority, is closing on time without creating more work for realtors and more stress for clients on closing day. It's already stressful enough for all involved. And so that's our priority number one. Even in spite of our current circumstances, we want to close on time with as few headaches as possible. Our second priority, which is probably always our second priority, is to make sure that if things don't close on time or at all, that either people don't get sued or that the damages are limited, which in the current situation we have some control over. If we think about what's our worst case scenario in all of this, it's everything shuts down, including banks, because then we're up the creek. We're in a lot of trouble if that if that happens. We can deal with partial shutdowns of things. We can deal with doing a lot of things electronically. We can deal with land titles closures, things like that. But if the whole industry gets shut down, as you can imagine, if we can't move money, if we can't do whatever, then how to release keys on closing day is probably way downstream from where our real issues lie. In terms of our best case scenario, you're looking at it. This is it. We adapt, we adjust, we do what we can to stay safe and to keep our clients safe and to make sure that we can still get things done. Everything that we all do is time sensitive, obviously, so we need to be mindful of doing it safely, but respecting our deadlines. So the reality is that we probably end up somewhere between our best and worst case scenario with having to adapt. For us, it's almost on a daily basis. We're checking in with clients, making sure that they're not sick, making sure that we have proper protocols in place for signing. One of the unique challenges that lawyers have that others in the industry don't have is you're all tech savvy and we're archaic. We're living in 1800s with having to sign paper pen. We don't DocuSign. We don't do anything like that. I hope this is a catalyst for change for our industry, but we're bound by some really old legislation, hundreds of years old, that requires us to sign paper pen. So when clients ask, can we just DocuSign with the lawyer as well? The answer is no, at least for the time being. We'll get really creative if they end up sick or if they have circumstances that require us to get really creative. But one of the challenges that we deal with, definitely. Best way to avoid problems on closing day or to minimize the damages that your clients, buyers or sellers will face is by proper contract drafting, making sure that you have the right clauses in there. There are a couple of things that I would highlight in there. I've heard a lot of kind of silly ideas come out from the legal side of the industry in terms of things that we should or shouldn't be doing. We just need to be practical about it. And so you've probably heard about or talked about a force majeure clause in your contracts. This is a good idea, but you really need to know what it is that you're putting into the contract and what it does and what the implications of it are and obligations. So whenever we put a force majeure clause in a contract, it basically protects whoever's identified under that clause from two things. So a force majeure arises when you can't fulfill your obligations under the contract due to extreme or extraordinary events. This would certainly qualify. And the events are beyond their control, which this absolutely is for all of us. It relieves the affected party from two things. From one, having to perform some or all of their obligations under the contract, and two, it reduces or eliminates their liability under the contract. So in terms of drafting a force majeure contract, obviously you'll want to talk to the lawyers that you work with about wording and specifics. It's on a case-by-case basis. There's certainly not a one-size-fits-all. But you want to be able to address that in the event that your clients are actually test positive or are under quarantine and legitimately can't close on time or at all. So that's probably the biggest one. Typically, a force majeure event only delays the performance of the event. So this is a good thing if you have willing sellers and buyers who want to come together on a transaction. It'll delay things until people get healthy or until banks or the industry reopens or whatever the circumstances are that led to the force majeure event, that those remedy themselves, and you can close after some delay, hopefully not too lengthy of a delay. We recognize that there's a domino effect in our industry in particular, whether it's somebody selling and buying at the same time. We've got a few of those on the go right now. As is always the case, we're asking that we don't sell and buy on the same day. Sometimes it's unavoidable, we know that, but as a general rule, there's just so many things that can go wrong on closing day. Having to have everything completed by noon and have keys released on both properties and moving trucks, and if there are any special provisions in the contract that sellers or buyers have to meet. It's a recipe for disaster, especially in these circumstances. So if you can avoid that, if at all possible, please do. Be careful with advising your buyer clients from walking away before a deal's firm. So we're getting quite a few questions about this, saying, well, I'm nervous that the market's going to tank, the prices are going to go down. I'm still in the conditional period right now. And so can't I just say, well, I couldn't get financing, or, they found mouse droppings in the property inspection, so I don't want the house, something like that. Keep in mind, as you read that clause in Section 8, I believe, of the contract, the conditions, there's a best effort requirement in there. And so they, whoever's condition is have to act reasonably and in good faith to complete that. So you can't just say, well, I didn't really like what the bank was offering me, so I'm going to walk away. It doesn't work that way. Obviously, there are provisions in the contract to be specific about your clauses, rate, amount that you're borrowing, things like that. Property inspection is subject to, what the buyer says ultimately, but it has to be reasonable. And so, if you're getting questions from clients saying, I changed my mind, I just want to hunker down and not do anything right now, be very, very careful with that. The odds of them getting sued for not acting in good faith or something else are quite high under that. And so just be cautious about that. We get a lot of questions about job loss. I know unemployment is skyrocketing in Alberta right now. A lot of people are being temporarily laid off or losing their jobs outright. That's obviously a legitimate reason to not follow through on the contract. If it's possible, lenders obviously will have something to say about that. But just the fear of job loss is not enough. If you're nervous about losing your job, and so you say, well, I'm not going to waive conditions because I'm nervous I won't have a job in 1, 2, 3, 6 months from now. You're at risk as a client of being sued for not acting in good faith and being reasonable under the condition waivers. So couple of specific clauses that you may want to consider altering in the standard area contract. Clause 1010 talks about if the buyer's not able to close in accordance with the contract, and it talks about seller can accept late payment to the purchase price. You might consider doctoring up this clause a little bit so that it's more clear about accepting late payments or obligating a seller to accept late payment. There's a trickle-down effect on this because it means we have to alter some of the paperwork on our end that we sign with clients. And so that's a good clause to be mindful of. Even saying, seller agrees to accept late payment for, 14 days, 21 days, whatever. Again, recognizing there's a trickle-down effect here. So I'm kind of speaking in the rainbows and butterflies scenario where that's feasible for sellers to do, but it's a clause worth considering for sure. Clause 12.1. So this is an important one. 12.1. So section 12 deals with remedies in the contract. So what you might consider doing if you're representing buyers is fixing up this clause to limit the buyer's exposure if they walk away. And so you can do this by doctoring up this clause just to limit their liability to losing their deposit only. As I'm sure you're all aware, when a buyer walks away from a transaction, they will lose their deposit, almost invariably. But they also run the risk of losing much more than that. And there's a long list of things that they can be sued for. Typically what happens is the buyers put it back on the market and then wait and see, and if there's a loss, they can be responsible for that. There's a long list of a whole bunch of things that they could be on the hook for. We're going to put a blog out in the next day or so for realtors about a lot of those things that their buyer clients could be sued for under this. So good idea to limit their exposure, recognizing it takes agreement from all sides to do this, but it might be a good idea to at least float it out there if you represent buyers to see if the sellers would agree to limit the exposure to loss of deposit, and then they can put it back on the market without exposing your prospective buyers to a lot more liability, which could be quite a bit. People have asked about putting in the contract a clause about, in the event that I lose my job temporarily or permanently at any point between signing the contract and possession day, seller agreeing to let the buyer walk away. This, in my mind, seems far-fetched that a seller would agree to this, but it might be worth considering and having a conversation about. Difficult to do because obviously other conditions would have been waived by this point. and obviously it leaves sellers in a lurch if they, have it, they think it's wrapped up and all done with, but there's a clause in there that says if the buyer loses their employment, that they can get out of the contract. We get into a bit of a gray area here, because if the buyer loses their job, obviously the lender needs to be made aware of this, and they'll pull the plug on the financing. So the deal might be dead anyway, but something worth considering, something worth having a conversation with the other side about, and just seeing what you can do about that. So title insurance. We don't generally recommend title insurance to all of our clients. It has its place for sure. It serves an important role, but we're not of the mindset that every transaction should have title insurance on it. Obviously, title insurance covers unknown title defects. It covers existing liens against the property, encroachment issues that show up on an RPR, title frauds, errors in land titles records, things like that. So it covers a long list of things for both property purchasers and lenders as well, one or both of those. So title insurance, we're recommending to our buyers that they get a policy of title insurance, typically somewhere between $300 and $500, depending on the value of the property. They are much more protected with that. So that's something that you might want to strike up a conversation with your buyer clients so they can anticipate the cost of this. And then obviously the lawyers that are involved for the conveyancing can flesh that out and talk about pros and cons and things like that. So those are the high points, Ryan, that I wanted to touch on. Happy to answer questions if there are any.
Anybody have any questions for Dave?
Dave, I've got a quick question for you. I came across a scenario the other day. I've got the buyer client. We're still in the conditional sale phase of the transaction. And I got a call from the listing realtor who said, due to financing issues, now we were purchasing a condo and they were moving up to a new build. We got the phone call I had with the other realtor was saying that they would not be able to get the financing for the new build, which now means they don't want to sell their condo anymore. So they wanted to walk away, the sellers wanted to walk away from the transaction in between the conditional sale side. Are you guys seeing a lot of that right now? And like, what would be the end result on pulling the plug as a seller mid-transaction?
Yeah, so I mean, it's a good question for sure. And it's obviously within the realm of possibility. We haven't encountered that yet. To be honest with you, that falls, more so onto the worst case scenario effect. And when we talk about the domino effect, obviously this doesn't just impact one individual. This can impact a whole chain of individuals. Under normal circumstances, what I would say is if the seller pulls out of the contract, I mean, assuming these are buyer conditions that haven't been waived yet, seller doesn't get to walk away. I mean, with the contract, buyers made an offer, sellers accepted that offer. The deal is conditional until the buyers waive those conditions. The short answer is the sellers need to honor the contract in this situation. Now, one thing that I really hope for, I mean, I'm an eternal optimist, so I always hope for this, but I really anticipate a lot of good faith cooperation, both between realtors and once it reaches conveyancing between the lawyers. And so I would hope that there would be a reasonable solution here that recognizes the human component of this, of not forcing people out of their homes or whatnot. But at the end of the day, we all have our clients that we represent and we have to do right by them. And if it comes down to strict interpretation of the contract, your buyers are in a solid position on this one.
Oh, okay, awesome. That's kind of what I thought. It's long story behind that, but that's kind of where we're at with it. So that's
it's a tough one for sure.
Oh, absolutely right. So thank you.
Play nice in the sandbox, everybody. I mean, this is so important, especially now. We need a lot of cooperation. We can get things done still. We can stay open for business. We can, keep the industry going. Even if it's on life support, we can still keep things going. but we can't do it without cooperation and a lot of goodwill between each other. So,
Has anybody had any buyers walk away once it started? Just use one of their conditions to walk away because they're nervous about the market and the virus? Nobody?
No.
I've had lots of buyers walk away before making the offer, but not within an offer.
In the middle?
No. Hey, David, one quick question for you.
that
Just to clarify, I know I've been advised that if our sellers test positive for COVID-19, that we have to declare that obviously as a material latent defect. Can we remove that material latent defect as soon as they have a clean bill of health?
Yeah, I mean, this is a bit of a tough one, because I think it would strictly qualify as that, but it's not in the standard sense of how we view these things. I mean, material latent defects have to be, known to the sellers and hidden, and they have to be dangerous. So obviously, if they disclose it, then there is no latent defect in that situation. But obviously, it's time limited. I mean, we know enough about this virus that we know, human exposure to it. We have a rough idea of how long people are symptomatic for, assuming that they recover, on average timelines. We know how long the virus can live on surfaces. So if it's a concern of moving into a house where somebody had COVID-19 and was symptomatic with it, I think that's reasonable to say that that's a material latent defect. I would probably be hesitant to categorize it as such, even though I do think that's accurate to say that. But just because, that's a scary term. When we talk about material latent defects, we usually talk about some sort of nefarious behavior on the part of a seller where they know that the furnace exhaust is leaking into the house and they just, cover it up or farmer fix it so that nobody knows at the time. We worry about those things because it's, like I say, one component of material latent defects is that they are dangerous. They're not just hidden. They have to be, they have to be dangerous, right? At the end of the day. So does that answer your question?
It clears it up a little bit. Yeah, thank you.
Sure.
For all the Edmonton agents, so the Calgary Real Estate Board released, it was almost like in the form of a conditional sale disclosure form, but it was for buyers and for sellers to disclose if the buyers, were sick or they traveled, or the sellers were sick and traveled. That was a board form. Did Edmonton come out with anything like that yet? Any of the Edmonton agents here?
One comment I would have, Ryan, on that. I'm glad they did that. I think it's a good idea. We're seeing a bit of people putting, their own waivers out there, for open houses or things like that. When you extend these to their logical legal conclusion, I think it borders on silly to think that a waiver when you view a house is going to protect.
Totally.
You saying, protect the sellers. I just think it's irrelevant. And when we look at it from a legal perspective and say, okay, can we trace that the prospective buyer absolutely contracted the virus from viewing the prospective seller's house? As you can all imagine, that's not going to happen. It's just, it's a bit silly. So, use common sense, use some precautions, take off your shoes, don't touch surfaces, wash your hands when you are, asymptomatic when you view houses, things like that. I don't know if people are still actually physically touring houses, but if they are, some common sense rules should apply. And I don't think there's any need for specific.
We're not allowed to do the open houses in Edmonton.
We're not allowed to do them anymore in Alberta area. It said that yesterday. So, because last weekend there was, what did we have? 100 in Calgary, and there was a similar in Edmonton too, right? So.
Yeah. Well, I mean, they said you can go do the video. You can shoot a video and send it to your client, but you can't.
Yeah.
The clients.
That makes a lot of sense to me.
Totally.
David, can I ask a question?
You bet.
Regarding the clause, I don't know if you can do this or not, but just out of curiosity, regarding clause 10.10 and 12.1, would there be a possibility that you could send Ryan an example of how you would adjust those to, like, the verbiage for
Sure.
us to have, so we can have examples of how we should look at that if should we have to come across it?
Yeah, for sure. Recognizing that it's on a case-by-case basis, and also recognizing that this is the cooperation piece where you have to, bring everyone together to agree on whatever it is that it says. But I'd be happy to put together an example clause for both of those. Sure.
That's great, because I think that with everybody's anxiety being where it's at, when we do come across, we want to be sure we have the correct verbiage so we don't have to keep going back and forth.
Makes everyone's life easier for sure when we get it right the first time.
Exactly.
Yeah. Dave, if you send that to me, I'll send it off to everybody when you get
Sure.
it over.
Yeah.
Thank you.
Okay.
Hi, Ryan. Can I ask a question?
Of course.
This is Mari from Century 21 Power Realty in
Hey, Mari.
Airdrie. Hi. A question about if you have sellers who have sold their place and they purchased something on an interim financing basis for 4 or 5 days. What, in the off chance, if the buyers for their place decide they're backing out once they've already taken firm sale on their new place?
So the answer to that would depend. I mean, this comes down to contract interpretation. So assuming that there are no force majeure clauses in that contract, and buyers just decide they're going to walk away because they're gun shy in the market or whatever the reason is, those buyers will get sued, and the losses could be large. I mean, if the contract is firm and they don't have a good explanation, the potential for a lawsuit is very, very high. Now, looking at it from the other side, one thing that we didn't talk about is there's a principle in law, without getting too complicated, just called contractual frustration. And so even without a force majeure clause, the law can operate to postpone or excuse the performance of a contract if there are unforeseen intervening circumstances that nullify the principal purpose or the root of the contract through no fault of the parties. And so if it's a situation where they experience job loss and lenders won't touch them to fund the deal, that's what they're going to argue if they get sued. They're going to say, listen, the contract was frustrated. I had no ability to close. It was beyond my control. And I like their chances in that regard. So this gets into a legal nightmare of both sides being right, but the contract being frustrated. So it would really depend on the reason why they walked away. But if I'm representing the sellers of this property, I'm going to remind the buyer's side that they will be sued if they walk away from this deal. And this again is the domino effect, right? If you have sellers who are also buying, you've got a whole world of hurt for all the people involved.
So what do you think would be the case if the buyers did have contractual frustration and could get out of the contract, and now the sellers just own 2 properties, and I have one happening, obviously, so I'm a little concerned.
Yeah, for sure. I mean, it's a good question, and it really depends. If the contract is frustrated on your client's sale because the buyers can't close for a legitimate reason, your clients who are purchasing can argue the same thing. I mean, if you're still in the condition phase, obviously that's going to be directly or indirectly one of the conditions of their new financing is that they offload the property that they are currently in. And so they could absolutely argue the same thing. And your best case scenario is everybody, shelters in place. They remain in the property they're in. They don't buy the new property because they can't qualify for it. The buyers of the condo, walk away. And everybody just kind of stays in the position that they're in right now. That's your best case scenario.
Okay, thank you so much.
Yeah, I know that's kind of a lawyer answer to your question.
That's
But
okay.
it's tough to anticipate, all the ins and outs of it. With your clients will have to make a decision. Once they know what's happening with the buyer, check in regularly with people. Make sure when you talk to the other agent that things are still a go. I'd be checking in daily or almost daily to make sure that nobody is symptomatic, nobody has job loss, and just do the best that you can. And then we have to react quickly. If the buyers of your client's place walk away, then they have to make a quick decision if they can walk away from their purchase and stay in place. But day by day decisions, right?
Right, for sure. And I would like to think that by the time my sellers take possession of their new home, that their buyers will have gone to sign at the lawyers. We're only talking a few days here of interim, So, okay, well, I guess we just keep playing it by ear. Thank you.
Yeah, for sure. And I mean, there's a worst case scenario here where after everyone has met with their respective lawyers and signed off on paperwork, that somebody either contracts the virus, in the days leading up to closing, or loses a job and can no longer qualify. That's a worst case scenario. And we have to deal with this in the best way we can. Never losing sight of the fact that there are people behind all these transactions who need a place to live, right? So.
Mm-hmm. Yes, for sure. Thank you so much.
You bet.
Anybody else? Anything for Dave right now? Check the chat. Oh, I think we're good. Dave, anything else to add?
No, I'm obviously open to questions. I'll get some clauses put together and get them over to you, Ryan. Obviously, an ounce of prevention is worth a pound of cure, always, but especially in times like these, if you can avoid, the two priorities, if you can keep those two priorities in mind of closing on time with as few headaches as possible and limit your client's exposure, then that'll be done through proper contract drafting, proper communication, and just making sure everyone's on the same page with the scenarios that could play out. So.
Awesome. Okay, well, Dave, thanks for coming. You can stay on if you want to stay on, obviously.
Sure.
So Matt from area got back to me on the 25% question. If a member's already paid, area is going to put a 25% credit on our accounts for those who've already paid for next year. So next year's dues will be 25% less. That's what he got back to me with. And then next up, we've got Heather with MMG Mortgages.
Hi, everyone.
Hey, Heather. How you doing?
Good. How are you?
Good, good.
So for anybody who doesn't know me, I've been in the mortgage industry for 17 years. So I'm the broker and mortgage agent at MMG Mortgages in Calgary. So a couple of the things that I just wanted to chat about was just in regards to a lot of the questions and circumstances and issues that we've been seeing within our brokerage. So a few things that have changed here over the last few days. The way that we're seeing appraisal services has definitely changed. So a lot of our clients, they've been concerned with appraisers going into their homes. So a few of the appraisal companies actually went to their regulatory body and made suggestions of how they could actually view homes without actually going into the homes. And so the banks have all adopted this new process with the exception of Bank of Montreal and CIBC. So appraisers will now use photos off of an MLS listing if it is a listed property. They can take photos through windows and they can actually provide their phones or iPads to the homeowner to walk through the home and taking pictures through the property. So the banks are now accepting these appraisals with those photos and that type of an inspection. It's still considered a full service appraisal. But unfortunately, those two lenders that I had mentioned, they're not on board with this. So any property that is actually needing an appraisal, they're either sending appraisers into the properties, but if the appraiser is not wanting to access the property, then they'll actually only complete the transaction or the mortgage if it's got a longer possession or closing where an appraiser could go in. So just be mindful of that. You can advise your clients of how the appraisal world is actually dealing with their appraisals now. There's been an astronomical amount of inquiries that we're dealing with regarding the payment deferral options for mortgages. So there's been a lot of frustrations from clients. So the finance minister had obviously announced last week that they would be that the banks are on board and the credit unions with doing the mortgage payment deferral. Unfortunately, the banks did not realize the amount of calls and inquiries that they would be getting. A lot of clients are under the impression, well, everybody, to be honest, is under the impression that if they're concerned about job loss, that they can take a payment holiday. That is not the case. You have to actually be in current financial distress where your mortgage payment is due within the next 7 to 14 days, and that you are concerned with actually the ability to make your payment. If that is you, then you can absolutely request either a skip a payment or a payment holiday. Depending on the bank and the mortgage insurer, it could be anywhere from 1 month to 6 months. It is not, you are not getting a free payment out of it or waived interest. Those payments are being capitalized onto the back end of your amortization. But it is an option. Some of the B lenders and alternative lenders are not on board with this yet. So if a client has a B mortgage, it's about 50-50. Half the lenders are allowing these payment holidays and half of them won't. So we're encouraging our clients to email the banks instead of calling the banks, because most clients are sitting on hold for 6, 7, 8 hours if they're even lucky enough to get through, only to be told that they are not eligible for a payment deferral unless their payment is up within the next 7 to 14 days. So just to give you some insight, most of these banks, even if I pick on MCAP as an example, they have in the queue right now 23,000 email requests from last week that they have not even had a chance to review from people looking for payment holidays. That is just email requests from one lender. So people who are in desperate need of payment relief here over the next 7 to 14 days, we're just having to encourage our clients to be patient while they get back to the clients. And so the payment holidays are not negatively impacting someone's credit. So that is a positive thing. But a lot of the consumers are under the impression that they do not need to call the bank and that they're just automatically being granted these payment holidays. If they do not make arrangements with the bank, it undoubtedly will affect their credit. So we're still trying to intervene when possible with our clients, but unfortunately, the banks are not taking direction from brokerages for the payment holidays. They do have to reach out to the banks directly. There's a series of questions that they have to ask. They do not need to prove job loss or prove assets or net worth or do an application or anything like that, but they do have to answer a series of questions. So that's in regards to the mortgage payment holidays. We have seen an unbelievable amount of clients through our doors in the last week who are trying to or have had to back out of contracts because of job loss, or their deposits, their down payment is in stocks, which have unfortunately dwindled and they no longer have their down payment available. So we've had handfuls of clients that have had to unfortunately walk away. Now, in the cases where somebody is still wanting to move forward, which is obviously something that we're pushing our clients to do so that they're not in breach of contract. But if somebody has had a mortgage approval, but their possession has not occurred yet, and they've lost their job or they're on temporary EI, so far we have not had one situation where the bank or mortgage insurer has pulled the plug on their mortgage. So the only lender that is not being cooperative at this point is TD Bank, unfortunately. I'm hoping that they'll get with the program, but as it has been so far, every client that has come to us with job loss that we have went to the bank or the mortgage insurer, they have made exceptions and these mortgages are still getting done. Now, this is not somebody calling us today saying, I want to buy a home and I'm unemployed. We're not using their previous income, but this is with somebody who has already purchased a home, has a mortgage approval, and they've now lost their job. Whether mortgage conditions have been met or not, the banks are making it work, again, with the exception of TD at this point. So any of you that potentially have clients that are in a situation like that, I just really encourage encourage you to tell your client to call their broker or the bank, because we are trying to look at workout scenarios for those clients. You also have to remember that if the client does not let the bank or broker know, when the client is signing in front of the lawyer, there is a questionnaire that the lawyer has to have the client complete. And one of those questions in this form says, who is your employer? So if the client writes that they're currently unemployed, and obviously the solicitor sends that through to the lender, that will be a red flag, the day before funding, which obviously we don't want to happen. So just definitely, I still encourage the clients who are in the situation of job loss or EI to still come forward, because we're trying to make all of those work, and it's been successful so far. There's definitely been a lot of worry that the banks are closing or that the funding departments could be closing. At this point, everyone's on skeleton staff, but there's no conversation that the banks will be closing or not transacting in business unless the federal government actually makes that decision that we can't transact in business. So at this point, as much as I don't like to say it's business as usual, it is kind of business as usual. It's just remote. The banks are all overloaded with the interest rates right now, and with all of these extraordinary situations, but everything is still getting done. I definitely agree with Dave in suggesting that we try and stagger closing dates when possible and obtain bridge financing. With the risk of careers shutting down or not being available, with some of the banks, the actual banks themselves, they do have branch closings that have happened. So for instance, there's 2 big banks where they've closed the majority of their branches, only leaving a few branches open. So those things will all delay the process of funding a deal, really. And so anytime that we can get bridge financing in place, I definitely recommend that. Yes, it costs the clients money for an admin fee, whether the funds are used or not, but at least it's security. So something that we're recommending to all of our clients. As you have probably all seen, the upcoming or the proposal of the stress test change that was slated for April has now been postponed. However, the Bank of Canada did drop the benchmark qualifying rate, so it's now 5.04. It wasn't a significant drop, but it has, on a mortgage transaction of say $500,000, that's providing an extra $40,000 in qualifying. So it's not a huge drop. It's obviously a bigger impact the higher the mortgage amount is, but it is still helping. So that's definitely been a positive with the benchmark rate dropping, and we likely will see further reductions to the benchmark rate in the upcoming months. So the other big thing that we're seeing right now is the interest rates. So this has been an absolute volatile gong show, to be honest. So a few weeks ago, about 3 weeks ago, we started to see the interest rates bottom out. So fixed rates dropped. We could do a 5-year fixed mortgage at 2.14%. So unbelievably low. That was unfortunately short-lived. As the Bank of Canada started to drop prime lending rate, that reduces our variable interest rates. So the Bank of Canada's prime, that's what changes our variable rates. It's Canada's bond market that changes the fixed rates. So the Bank of Canada dropped prime lending rate twice within a 10-day period. So now bank prime is sitting at 2.95. So what happened is the Bank of Canada, they did pass, the banks individually passed along that savings to the clients, which was great. But in turn, what they did is they reduced their spread or their margin. So what ended up happening a couple weeks ago, somebody could obtain a variable mortgage at prime -1. So with prime rate now being today at 2.95, prime -1 would be 1.95. So when the bank passed along those prime rate reductions, they narrowed their spread. So they're no longer offering prime -1. They're now offering closer to prime -0.1 or prime -0.4. So yes, they passed it along to the clients, but they narrowed their spread. So to be honest, the clients really didn't get much, like clients directly or anybody in a variable rate didn't really get much of a break. So that's what's happening with the variable terms. The spreads are narrowing. With the fixed rates, the same day that the Bank of Canada announced that prime rate was dropping, so that was about a week ago, right away the fixed rate started to increase, even though our bond market was not changing. So fixed rates now for the last week have been increasing rapidly. So since we've been on this phone call, I've had 3 rate increases come through from various banks still. So a lot of clients don't understand this. We don't understand it either. I mean, ultimately, the banks are not profitable if they're lending at sub 2% for a long period of time. So the banks are increasing their rates, even though the bond markets are not changing. So it's unfortunate, but it is what it is. So clients can still get a rate hold if they've got an upcoming renewal happening, or if they're in the market to buy, because we are still seeing a lot of buyers. So yes, we're seeing a lot of transactions unfortunately fall through, and we are seeing clients sit on the fence. But on the flip side, we're seeing a lot of investors come to the table, and we do still have buyers that are calling us on a daily basis that are literally not saying a word about COVID. So it's kind of bizarre, but they're happy to still transact. So for them, clearly we need to ensure that we're putting rate holds in place, because the rates have went up. So in a week, just to put it into perspective, the fixed rates have went up by 0.5 percentage point, which is huge. And unfortunately, they're going to continue to increase over the next little while. So that's what we're seeing as far as interest rates are concerned, and what we're seeing in the market. I see a question from Crystal. She says, what happens to the deferred payments? Here in Fort McMurray, when people deferred payments because of the fire, found out later that those payments were due lump sum at the end of the term. So that is still the case because it's being capitalized onto the back end of your mortgage. So for instance, if you were selling your home in a year from now and you had deferred payments, your payout statement that the bank issues is actually issued with 2 separate mortgage amounts. One is your standard mortgage balance, and the second payout amount is that lump sum. So which is the deferred amount. So whenever you do end up selling your selling your home, that is still due. So that's, a lot of people are under the impression that they're literally just getting a payment holiday that they never have to repay, and that's not the case. They still do owe that money. And so if you sell the home, it is still owing. If your mortgage is up for renewal or you go to refinance it, that payout statement, it's all encompassed. So the new lender could take on still that entire amount, even the deferred payments. Does that answer your question, Crystal? If not, let me know. Does anybody else have any questions? I know it's pretty volatile, so if anybody does have any questions that come up over the next little while, don't hesitate to reach out to us. I know it's been pretty messy.
Hey Heather, I do have one question on that regard, or that topic. I've just been hearing a lot of different scenarios with the deferred payments and like you said, it getting capitalized on the back end and whatnot. And I just hear different end games, if you will, with different lenders. And I'm not sure if it's a common goal or a common scenario for everybody, but the most recent news I heard this morning was, I guess the question for you to simplify it is, will your payment go up if you defer payments once you start making your regular payments again?
Yeah, good question. On the mortgage itself, it will not. Like for a mortgage, your payments will absolutely stay the same. The payment is literally just getting kind of added as a lump sum to the end of the term, but your payments won't change. Now, there's partners that we work with. So for instance, there's a company called Advanced, and we work with them on a day-to-day basis for when we're doing a mortgage approval for a client. So we'll bring them into a situation when we want to reduce somebody's car payments or reduce their lease payments on an existing vehicle that they might have, so that we can qualify them for more money on the mortgage. So they've come to the table as well, and they've said that they can look at doing kind of payment holidays for people's vehicle loans as well. Now, in a case of a vehicle loan or a student loan that's being deferred, then absolutely those payments for the rest of the term will absolutely increase. So it's a good question. For the mortgage, it won't, but for a lot of the vehicle loans, the vehicle holidays, the student loans, those payments will increase for the remainder of the term after the payment holiday has occurred.
Okay, so for simple math, just I guess is a good example to tell our clients, because I know they've been calling and asking. Let's just assume your mortgage is up for renewal January 2021, and let's just say at that time, had you made all your standard payments, there's no pandemic, your balance would have been $300,000. If you take 3 months of deferred payments, and let's just say each payment was $2,000 for simple math, from January 2021, would your mortgage amount now be
Correct.
306 instead of the 300, and now you're going to refinance 306?
Yeah, that's accurate. It's basically the same thing that we saw with the Fort McMurray fires. It was the exact same situation. So we were just having to be really cognizant of getting mortgage payout statements. And as realtors too, instead of making any assumptions, we want to make sure that we're getting those payout statements up front when we're calculating kind of what type of net proceeds that we have left from the sale of the home. So you're correct with your assumption there.
So if that's the case, why are some of the lenders or the insurers having such a big issue with people that have lost their jobs? Like, I know there's a lot of people out there, and I think there's probably some of us in this group that are going to be included in this. Me personally, I can afford my mortgage payment right now for the next couple months, I'm sure. But with my business going down, all my buyers walking away and waiting, my listings aren't getting showings, 2, 3, 4 months down the road, I might have to defer some payments.
Yeah.
Why are lenders so adamant that it's a case by case basis for people that have to prove physical financial instability, when down the road it's going to take longer, but they are going to recoup that money, are they not?
They will, and it's a good question. And honestly, I can't tell you, we're getting, each broker in my office is getting hundreds of emails a day about this,
Yeah.
and I hate to say it, but it is super true. It's bank dependent on what their answers are. B, it's insurer dependent on what their answers are. Everybody has slightly different guidelines. The other thing is that this is primarily for owner occupied homes. If somebody has rental properties or investment properties, the banks are not so willing to give payment holidays. So it's supposed to be for owner occupied homes, but there are some lenders like MCAP, RMG, they are giving payment holidays to everyone for up to 6 months, no matter what type of, or however your house is classified, whether it's a rental or owner occupied home. So I agree with you. I think it is potentially narrow-minded for some of the lenders not to allow that to everybody. But so far we've heard really good success with everybody that has applied. I think the biggest thing is that this program for the deferral, it's not set for everybody today, or people who are assuming that they're going to be in financial trouble. They're trying to deal, like you can imagine, the hundreds of thousands of people that are applying for this on a daily basis. The banks have pulled resources. Like, the banks are no longer doing audits anymore. The banks are not doing any marketing anymore. They've pulled everybody off of their back end lines who don't usually answer their who are not usually on the phone, and they've pulled everybody into these call centers to try to pool resources together to deal with all of these inquiries. And so what they're telling us is that people right now that are getting quote unquote turned away, it's not turned away forever. It's just they need to deal with the next payments within the next 7 to 14 days. And so
Okay.
if you're worried about payments in the next few months, you would basically have to call at that time, or you're calling today saying that you're in financial distress today. So to be
Right.
honest, kind of dependent on how you're framing those conversations. There's no application. You don't need to actually prove that you've lost your job. It's not like that. But they do have to show that they're doing a level of due diligence and at least asking some questions, so that not everybody is asking to defer, even people who are not affected whatsoever, right?
Right.
So for somebody who's concerned about future income, and I'm with you, Kenny, half of my brokers are concerned about this as well. I mean, we're seeing the same effect that you are.
Yeah.
And we're just telling everybody is, if you're concerned about your payments in the next little while, even if your payment is not within the 7 to 14 days, just make sure that your conversation tells the bank that you are financially distressed today, right? So they just have to manage the calls, right? That's the biggest thing.
And as far as being financially distressed, I had a client call me last night saying that one party of the family is still working, the other one's not. And therefore they can't afford the full amount of all their bills, but they have a line of credit. It is financial, just if you have availability to a line of credit, are they going to expect you to use that to pay for your mortgage, or are you still considered financially distressed even though you have a line of credit accessible to you?
No, if there's job loss, it's it's financial distress for sure. It's a good question. I mean, the banks also are not wanting people to go to predatory lending, right? So they don't want people to be walking into payday loan centers to take out high interest. The government's really against that. So if somebody, has access to say $100,000 line of credit on their residence, like a HELOC secured to their home, but yet they have no work, the banks can't say, go and max out your credit and then come back to us, right? So
Right.
it's a
Okay.
good question, but no, if there's job loss or reduction in income, and people are worried about actually making ends meet, then absolutely, that's financial distress.
I know. Sorry, everybody. I'm hogging the phone line here, but it's just a lot of common questions I'm getting. So with the job loss, and this one pertains to everybody within this call, are the banks going to look at our industry as job loss? Because, like I said, I think a lot of us are going to suffer in the interim here with our clients backing out, and I've heard a couple stories already today. Are the banks going to look at realtors and mortgage brokers in that same regard? Even though we're not laid off, but we're self-employed. I know we have access to the federal reserves and what they're implementing, but our day-to-day business
Yeah.
is technically the job loss.
Yeah, and it's not, this financial relief is not just for somebody who has effectively lost their job, but it's for anybody who has had a change or reduction in their day-to-day income and their day-to-day livelihood.
Okay.
Yeah, so even for anybody on this call that's concerned about their mortgage payments, or they've got clients, I mean, honestly, we're encouraging our clients to call. You just have to be mindful that if your mortgage payment isn't due in the next 7 to 14 days, you need to be really patient for a response back, because you might get put to the back of the queue if your payment isn't due for 30 days from now, right? But if you do get a response sooner than that and they say no, it might be because of how you framed your conversation. If you've said, we still have a lot of income coming in, nobody's had loss of income, no one's had loss of employment, we're all still, status quo, but we're concerned about 6 months down the road, they would say no to that client, right? So
Right.
it's dependent on how you're framing those conversations as well.
Okay. I appreciate all the info. Thank you very much.
No worries. Does anyone else have any questions?
Hi, Heather. It's Guy Cooley here.
Hi.
Hi, I just want to let you know that I personally, I had some tenants that called me and they lost their jobs due to the whole epidemic that's going on, or pandemic. And I have a mortgage with CIBC for my rental property.
Yep.
And it took me 6.5 hours over 2 days to get a hold of CIBC. But when I did, they were great, and they actually deferred my payments on my rental property because the tenant was unemployed.
So that's amazing. And we're not seeing a lot of that happen. We've actually I have a broker in my office. She's got 45 rental properties that she owns, and calls are coming in left, right, and center from her tenants. And she's actually privately banked with CIBC, and she did not have that same luck. So it does really seem to be case by case. The other thing that, so Jason Kenney had actually made an announcement yesterday that anybody getting payment relief on a rental property should actually pass that relief, those savings on to their tenants.
Yeah,
so
which I did do, which obviously keeps the tenant in the unit. Obviously, nobody wants to evict an unemployed tenant, right? So
of course, yeah, no, of course. Well, you did the right thing, even to sit on the phone for 6 hours for a tenant and not even your own home. But yeah, not all the banks are being as agreeable for the rental properties. So good for you that you got it. And I mean, we would just keep encouraging people to, not take a no for an answer, to be honest, if you really are in financial distress or your tenants are.
That's why I thought I'd step in and let you know that anyway. Just definitely still make the phone calls and go to bat for your tenants. And obviously I can't afford 2 mortgages myself in this downturn too. So
of course, yeah, good on you.
It was good that they did that. So anyway, just wanted to share that.
So Pamela put a comment on a question just saying that, is this going to be, oh no, sorry, this was Michael, is this going to be shown on title? So the title won't necessarily be changed. The title would remain the same, but typically with a mortgage, the amount that's registered on title, it doesn't reduce as your mortgage payments reduce, right? And so there's usually contingencies in there, but it's whatever the payout amount is of the mortgage. And so it's just like if somebody had been really sloppy with their mortgage payments and they'd neglected to make payments, it doesn't actually show on title unless it's kind of going into, say, more of like a foreclosure process when they actually register something like a certificate of lis pendens. So in this case, the title actually won't be changing. We just have to be cognizant to really get payout statements up front and not just rely on a client's kind of year-end mortgage statement when we're wondering what the balance is that's owed. Pamela's question, there's no difference in deferred payment and payment vacation. So we're getting this question a lot from people because when people are logging into online banking with their mortgage companies, it's showing, do you want to skip a payment or do you want to defer a payment? The true definition between the two, skipping a payment, is really just somebody whose payment is maybe due on, say, Friday of this week, but they are kind of scrounging to get money together for a payment that's due middle of next week. So that would just be kind of deferring a payment off for a week, but that payment still occurs. Whereas taking an actual kind of payment holiday is actually getting approval from the bank to take those payments and capitalize them onto the back end of your term. So that's the difference between the two. Does anybody else have any questions? Deferral wise or interest rates or anything? No, well, if anybody else does have any questions come up, let us know, and I can certainly send some information over to Ryan as well to send out just regarding the kind of payment deferral options, not just for the mortgages, but for people's vehicle loans, et cetera, and just things that we've also got some content that actually shows every single bank's phone number. So it's something that you guys can also kind of cascade to your clients as well. It's been helpful so far. You just have to make sure to let your clients know that it'll be a long wait and to kind of call when it's really necessary. But I'll send that information to Ryan, and then if anybody else has any questions, I'm always happy to help.
Any other questions for Heather? Awesome. Well, thanks, Heather. That was very informative. Heather, are you going to stick around or are you going to take off?
Yeah, I can stick around for a bit.
Okay. So is there any other questions for Heather or Dave while we have them here before we just head into the last portion of this? Awesome. So what we're going to do now is we've got, so part of this is we really wanted to keep this as a collaboration with as agents, right? So we do have some facilitators that are from other brokerages and we kind of want to keep it that way. So if any of you want to contribute or you think that there's a good webinar that we can do or you want to come on as a facilitator, it doesn't matter what market you're in, what brokerage you're from, just reach out to me and let me know. But what we're going to do now, so we have Margaret Neff from Remax and Allison Marshall from Remax as well. And then we have Dela and Cassandra from Spark Real Estate. And we're just gonna go into some separate rooms now for about 15 minutes. We're gonna keep it really casual. We were sort of talking about getting some material together for some specific collaboration down the road, but we thought that maybe since this is just new, we just want to kind of pick your brains to see what you guys want and what you would like to see while we're kind of sitting at home, just making sure that we can be ready for when this is over. So we're just going to go into there'll be about 7 or 8 people per room, so just feel free to chat with each other. But what we're really going to want to get is what your needs are right now, so we can start getting the right people in place for speakers, workshops, whatever it is. So we'll go into those now, and then we'll come back and just kind of close it up in about 15 minutes, and we can get on with our day. So I'm just gonna open up the rooms, then you'll just have to agree to join them, and then we'll all break out. How's it going, guys?
Hey, what's up?
Not much. Not much.
I'll log in so you can see me here.
Yeah, right.
So, yeah. Oh, that was good. That was
Good.
a lot of good information. Yeah, for sure.
Yeah, it was good. They're pretty awesome people. So, Tracy, are you here? And Willie.
Hey, hello.
Hey, Willie, how's it going?
Living the dream. How you
Yeah,
guys
man.
doing?
Oh, pretty good. Pretty good.
Good.
I'm just checking out these other rooms here, make sure. All right. Good. How are you guys finding everything right now? Tracy? Oh, well, looks like it's just me and you.
Yeah. That's all right.
That's fine.
Yeah, how's it going?
Oh, it's going, Oh, I just no sleep last night. Oh, Kelly was sick
Really?
last night.
Oh, yeah?
Mm-hmm.
Yeah, that's too bad. Yeah, it's slow. Not gonna lie, it's slow. Even
Yeah.
the lead gen, even the Sierra website and stuff hasn't. I thought it would be getting kind of more, action and stuff, or people just coming back, but it seems to just be kind of the same people that are coming back and the same kind of volume and stuff or whatever. I thought that we'd be maybe getting a little more since everyone's kind of sitting at home and stuff, but that hasn't really increased much, it doesn't look like. So just kind of slow all around, it seems.
Yeah, totally. Yeah, it is.
Yeah. Yeah.
Just while everybody's getting used to everything, right?
Yeah. Yeah. The mortgage information was good. That's for sure.
Yeah, for sure.
Especially for like tenants and rental properties and that kind of stuff. Pass that on.
Yeah, hopefully they're gonna send us a bunch of information, and I'll just pass it off to everybody. How's everything? How's everything going at home? Are you just
good.
Hibernating?
Yeah, pretty much. Yeah. Went to the grocery store like last week, kind of hung out. I went out on Sunday. I was actually really surprised how many people were out and about on Sunday. It was kind of crazy because it was so nice out, but like I ran to the store to grab something, and I went over to Country Hills and I went to like Beacon Hill shopping area and stuff, and it was packed. There was people everywhere. I was actually pretty surprised.
Yeah, I know. People need to stop doing that, hey?
Yeah. And like there's a dog park over here that's usually not very busy. The parking lot was packed. Like everyone was at the dog park, and there's like bike paths and stuff. And there was more people walking up and down that bike path than I've ever seen there before ever. It was crazy.
Yeah, people are. If everyone would just stay home for 3 weeks and not go out, this would go away. Ish.
Yeah. Yeah, it was surprising. There was more people at the dog park and on that bike path, just like walking and stuff. I get it; it was nice, but there was more people down there than I've ever seen down there. Like
Wow.
It was, yeah, it was crazy.
That's crazy.
Yeah, but yeah, I've just been at home, trying to keep my mind going.
Yeah, lots of working and Netflix, and then working some more, and you know, there's not a whole lot to do right now, that's for sure.
Yeah. Yeah.
So what are you guys doing to stay productive? That's always a question.
Oh, sorry, Willie, I thought you left.
Yeah, no. So I'm here. Yeah, just
So,
you know,
Willie, what
the daily
brokerage you
grind.
with?
Yeah, EXP.
Oh, it's Willie up. Sorry. Yeah. How you doing? Yeah. We're just we're just trying to get these seminars and workshops going, since there's nothing really else to do at the moment. So
Yeah, they're fantastic.
Quentin's one of our